Hello and welcome to the Down to Finance podcast by Future Finance Group. My name's Amy and I'm the director, and my amazing team will also feature in some of these series. We are going to help you with learning about how to purchase your first home and everything else finance. Just remember to keep in mind, these podcasts are just general advice, and if you are after something more customized, reach out to your financial advisor, or you can reach out to us and we'd be more than happy to help.
All right, welcome to the Future Finance Group Down to Finance podcast. In this episode, we're going to look at credit reports, break them down and see what is contained with them and what can affect the credit report. We've got Mandy, one of our mortgage brokers, with us today, and also Sarah. Welcome, ladies.
Thank you.
Thank you.
So tell us, what is a credit report, Sarah?
So a credit report is basically a report that's made up of, I guess, your financial history, maybe it would be a way to break it down. Essentially, your credit score will be between sort of 0 and 1200, and then there's quite a few factors that can impact your credit score in terms of, so you want it to be as close to 1200 as possible. I haven't seen too many that are perfect, but and then essentially as you say apply for credit, then your credit score will then come down. And it also can recover as well. So, yeah.
So it's a fluid figure, so to speak. So it's not set in stone?
No, it's not set in stone. I guess your day-to-day life, a few things can factor it. As I said, credit applications, multiple credit applications, even things like moving house and things like that. So there's lots of information that I've retained on your report. It's not just necessarily finance information.
Right. Yep.
Yeah.
So if we start with the immaculate credit score of 1200.
Our favourites.
So what is a acceptable credit score, Mandy? Like what sort of range would we be looking at?
Yeah, that's
for
a great
mainstream
question.
lender application?
An average credit score or a good credit score really ranges.
Let's start at immaculate is 1200 and we sort of go backwards from there. So what would be an average credit score?
Probably looking between, say, 650 and 750 for an average credit report.
And that's obviously common to get that sort of score. So a lot of people feel like, my credit score, it's only 700 out of 1200 and quite stressed by that. But obviously 650 to 750, what we would see is average, acceptable, perfect for lending.
Especially first home buyers, ones that haven't had mortgages in the past. They do tend to have a lower credit score, generally speaking, because they haven't had
No credit history.
Yeah, no credit history, absolutely. They might have had Optus on their credit report because they might have got a phone through them, or they might have had some afterpay, and all of those little things also affect their scores as well.
Yeah. So what else appears on the credit report that's important to our listeners?
A major one is the repayment history. So if you've got it's a big one. If you've got, say, a credit card, if your repayment history for your credit card is overdue or if it's in arrears, those sorts of things can appear in your credit report, which can massively negatively affect it as well.
Yeah. So, and that's a relatively new thing, like maybe a couple of years now. Time gets away from me. That now the
Probably
banks,
5 years.
The bank's going to actually see, whether you were 1 month late, you'll have a 1 next to a, say that Bank of Melbourne credit card that you were 1 month late, and then if you then didn't pay it for that second month, now you've got a 2, and so on. You just certainly don't want to have those numbers on your monthly repayments. Ideally,
red 1 or 2s.
Exactly.
I think it's important to know that all lenders or credit providers see this data these days, so it's not something that can be hidden.
No.
And sometimes it can, open banking, which is slowly being brought in, and it's only going to get more open, so to speak.
Yeah.
So, and it goes back 2 years as well. So even if you had a late credit card 1 month in arrears,
they'll be able to see that for
And then after 2 years, it sort of
drops off.
Drops off.
Yeah.
Very important.
Very important.
So what else is on the credit report that can affect a credit score overall?
You mentioned before about residence and if you're changing jobs frequently as well.
So the
those
banks
things
will be
can
able to
picked up.
see, how many times you've moved houses, which obviously shows maybe a little bit of stability or instability if there's too much.
That actually will show as a flag on the credit report.
Absolutely.
It'll say instability of employment or instability of residence.
Then you've also got things like, so for instance, if you're self-employed, or it will list that you're a director and things like that. So that, again, that doesn't necessarily mean that it's a negative thing.
That's right.
But again, they can see everything.
Yeah,
so
and ask you about that directorship
and
or previous
what's happening with that company and so forth. Is it profitable? Blah blah blah. So it opens lots of cans of worms.
It does. It's
your
sort of a little
credit
bit of a
report.
Bible for us. It's the first thing that we'll sort of go to when a new client comes to us. They accept our privacy agreement and allow us to run
The first thing that I do
credit
before
report.
I even start working on anyone's file is basically read that credit report.
Yeah, and it shows, everything very, very helpful to us so that nothing's missed. We can see what the bank can see.
Yeah.
So that there's no hiccups.
And as well, it'll
during the
show
application process.
if that credit facility is open or closed.
That's right.
So that's a good thing, as you just said. Like, a lot of people forget that, they opened that Latitude credit card
when they're
5 years ago.
Qualified to get the PlayStation.
So
that happens quite a bit.
Yeah.
A new
So
pair of shoes.
we tend to
The afterpay that they never used.
Yes.
Or
Zip pay, afterpay, all those facilities.
they've just applied for it to see what it's
doesn't
about.
mean it's a bad thing. It just means that they may not know it's still open.
Yeah.
And then we have to
I
get the
feel like I
statements and
have
make
that
sure it's-
conversation weekly with, clients being like, hey, you haven't provided us that statement for that credit card. And they're like, what credit card?
Yeah.
And then, you have to send them the account number. And they're like, oh, God, I opened that when I first moved out of home when I was 22 to buy my furniture or whatever. So, it's got lots of information on there.
So if a credit score's not fantastic and we're trying to improve it, what things can we do to improve that credit score, and how long would it take?
So I think for us at FFG, if there's afterpay, buy now, pay later, those types of credit facilities, that's basically the first thing I'm writing in my strategy to the client is let's close that because that will improve your score. Not necessarily immediately. So anytime we close credit facilities, we allow for about 45 days for it actually to be reflective on your report. And that's when hopefully we would see that your credit score is repairing and coming up.
Yeah.
Because they're reported monthly. So if you're, close it in the middle of the month, it's not going to show up until the following month on the report that it actually has been
System needs
closed.
to refresh.
Yeah, absolutely.
Yeah, and they obviously have to have that confirmation from the actual credit provider as well. So it's, moving parts.
Yep, and some of the providers, probably the lower tier lenders, take longer to
little slower.
close everything down.
So, so I guess that's a big important part of our application process is to read that really thoroughly so that we can set you up to, close anything down, to improve your score the best way that we can.
The credit score can really be an impact on the strategy, the whole entire strategy.
Avenue of where we're going to be taking you, really.
Because that'll give us a benchmark of which lenders can we put you with. Does it limit the amount of lenders, the lender
100%.
Options? Are we limited to only a couple because of the credit score? Or if you've got a really great credit score, can we kind of take you anywhere?
Yeah.
So that is, why we really do start with the credit score as the first option.
That's right. And sometimes just finding the keys to the castle.
Yeah.
So sometimes one bank might be okay for a particular credit score or reasoning for a late payment. And I think just going back to if a repayment is late and there's a 2 on the credit report saying 2 months late, like I've had instances where the credit score is still good, 800, but we just have to let the bank know
and
why was it late at that point in time. Like, had a
getting
client,
commentary around that.
self-employed, had to take time off work, and bank's like, that makes sense. Everything else is clean.
Yeah. It's about, I guess, giving a good explanation and finding out the story rather than us putting up the application, finding out after it's, been sent off to the bank that, your client needed to have 2 months off work and so forth. Whereas sort of looks a little bit better that we're already being honest and open. And, hey, we are aware that these guys were late on their home loan repayment 18 months ago, but, this is the explanation for it.
And some brokers don't credit score all
At all.
clients.
Yeah.
It does cost.
Yeah, it costs money to do it.
We absorb that cost, but we credit check every client to make sure
Absolutely.
that we're setting them up for success for their application. So let's now talk about defaults and those types of things. So if a client does have a default, what do we sort of normally look to do to try and assist that client moving forward?
Ideally have it removed if that's possible. And that's where we would refer you to like a third-party credit repair company, which we've had huge successes for. And it ultimately, it's life-changing for the client to be able to do that, because we're then opening, that client to a lot more options and lenders and, better products, better rates, etc. Whereas...
And the default's removed.
And the default's gone, but, so...
And it's not a not now. It's not a not ever that you can't get finance. It's just maybe not right now, or maybe we just need to do a little bit of repairing to your credit report, and then
little bit of work before we, move.
Bit of nip tuck.
It doesn't take you out of it forever.
With the credit repair, how long would that sort of generally take? As a ballpark.
Depending, on the severity of it. I've recently actually just had one where default was on there from Optus. Client had no idea or just didn't realise the impact that would have. We've then referred them on, and it was probably about maybe 4 to 6 weeks for the credit repair company to be able to negotiate to have it removed.
Isn't a long time.
No, I mean, it's really not a long time at all. Then I've seen cases where it can be months, but, they're quite
more complex.
severe, and then heavily, a lot more moving parts to that.
Every situation's different, really.
Yeah.
You've got to take it as it comes.
Yeah.
And quite often it might not be, a severe default like a lot of times. And we spoke about another episode where it could just be an Optus when I was
$500.
$500 bill,
Yeah.
moved from house to house, caught up with me, didn't even know that they had missed the payment sort of thing. I'm deliberate about it, but it's caught up with them, but don't realise until they come to apply for any sort of finance, and it's flagged on their report, which I think comes back to the importance of
being aware.
And the sooner they engage with us, we can put them on the right pathway, because you don't want them to come to us, savings in the bank, ready to go, do the
Found
credit check.
the house of their dreams.
Yeah, house of the dreams.
And we have to be the dream squasher for momentarily. Until we, pull our sleeves up and,
Get to work.
Yeah. So,
and a late payment as well doesn't necessarily mean you can't get finance.
No.
Maybe
That's
it's
right.
just an explanation to the lender as to why that happened. Like you said, moved house, didn't get the notice because it was getting mailed out to you and going to your old address.
or a good one is that credit card that you forgot, and the annual package fee for the credit card's being charged. You're not even using the card, and you didn't know that charge had happened. So I see that one a lot as well.
There's been times that we've had people with late payments on their credit report, and they've still been able to get finance depending on their circumstances. And
that's right. It's just the explanation.
Absolutely.
Life events, life happens.
Exactly.
And I think it's important as well that if someone's got a bad credit score, there are lenders that specialise in that area.
Yeah.
So did you want to tell us a little bit about those situations?
So in terms of just, there are products available. There are what we call sort of like second tier lenders that, offer, they don't credit score essentially. And they will, I guess, look at your scenario, as a whole, go away and work out, where you sort of fall in that product.
Within their product suite.
Within that product suite.
Customised.
Yeah. So it's probably customised lending, I guess. And then, that's when they'll come back and talk rate, product, et cetera, that you qualify for based on your poor conduct or poor credit history.
Yeah. And sometimes, obviously, the rate's going to be higher.
Yeah. It's a little bit, ugly.
fees. But
It's a good
That's
temporary
okay.
good
solution.
solution for now.
Yeah, it's
Yeah.
solution-based lending. And the way I sort of explain it to my clients is it's about going there for, 6 months, maybe 12 months, something like that. And then it's almost like a clean slate, get you back to a clean slate. And then we come back to, the more, the big four.
That's right.
sort
So
of thing.
it's a solution for now, and then we
It's like
come
clean
up,
your act up.
almost like cleaning
and then
up the credit report
Yeah.
from scratch, come up
And
with
then
that
get you back on track.
And then-
solution.
yeah,
And sometimes
absolutely.
it might take 6-12 months and you're
Yeah.
back with that
Yeah.
mainstream lender. So
With, that more, I guess,
Better interest
sharper rate, better looking rate. And it's a good stepping stone to get you back on track. Because
Absolutely.
as you said, life happens, and we find ourselves in tricky situations. And rather than, I guess, burying our heads, we find the solution and then, get you back on track.
Yeah.
Yeah.
So I think, one of the key takeaways from this, like if anyone's got any concerns about what their credit score might be, or some people are like, I was really, really worried what my credit score might be. But the sooner they come to us,
Yeah.
accept the privacy, we can do a credit check,
Yeah.
go through it with them. And sometimes they get quite surprised.
Yeah,
Oh, geez, I
pleasantly.
didn't know.
Yeah.
They didn't think their credit score would be 800, or they thought they might have had a default. I thought I might have had a late payment. It's all clear. So sometimes it can be for the positive as well.
Yeah, absolutely.
Alrighty, well, I think we've sort of covered everything on credit reports. So we'll wrap it up there. If you do have any questions about credit reporting or would like to have a credit report run, please reach out to us at Future Finance Group, call our reception team or get in touch via email, and we can do a report and see where everything's at and get you on that journey to your home loan scenario. Thanks, ladies.
Thank you.
Thank you.